As I look at this, I think, one, the results were good in Q2. But more importantly, I think my initial take is Marvin, the new CEO, Marvin Ellison's getting to work. You know, as I read the release, basically, he's streamlining this business, which I think needs to happen. So they're divesting Orchard Supply. It was probably an acquisition they should not have made a few years ago. They're divesting that. He also talks in the release about rationalizing their inventory.
Right.
Getting back to products that actually sell well. And so there's going to be some near-term pain associated with those efforts.
Yeah, I think
that's going to set the business up better.
180 basis points lost in terms of the operating margin for right now. They expect that sort of a decrease.
That's right.
But you're looking at this longer term saying, hey, this is the proper thing to have done. We were talking about how Walmart kind of has made some investments that seem to pay off in its most recent quarter. You think give them some time. This is the right thing to do, even though the stock's selling off today. Yeah,
look, and I don't think it's much time. You know, first off, I think as the market digests this today, we have the conference call at 9 a.m., I think the stock rebounds. That'd be my bet today. The stock rebounds as we digest this. But look, the moves they're making today aren't that drastic. You know, I think there was a lot of concern out there that there would need to be this really significant reinvestment. We're not hearing that yet. Now, they're going to have their analyst meeting in December. Maybe something more comes. But as of right now, it's tweaking. It's kind of cleaning up the business model. And I think we start to see the benefits of this as soon as the next couple quarters.
Lowe's or Home Depot?
Home Depot's the better company. Okay. Lowe's is the better stock.
Because it's a turnaround in some respects? Because Marvin Ellison's going to get in there and make some changes and, help the stock?
I think that's exactly right. I mean, I've talked about this a lot, so now you have Marvin Ellison, previously at Home Depot, coming to run Lowe's. He knows how to run stores. I think the missing piece of Lowe's has been store-level execution. You got a 5 percentage point deficit in the operating margins of Lowe's versus those of Home Depot. It's a big gap. They do the same thing. I think over time, you'll see that start to narrow, and that's where the stock really begins to work.
You know, inventory management's a big deal. You talk about how in this release, they say they're going to be getting rid of some of the slower selling things, making sure that they've got more of the stuff that sells well. But even just supply issues, making sure they have what they are offering. I mean, that's been an issue I've noticed in Lowe's versus Home Depot. Just having the stuff that they have on the shelves available for purchase. That's a bigger investment.
And I think that's really key. You know, one of the things what encourages me here more is that it's not a traffic issue. Customers are coming to Lowe's stores. Right. They're just not buying as much as they should once they're there. It's a conversion issue. Exactly what you're talking about, Becky. So people are showing up at these stores and the product's not there. Right. But that's much easier to fix than a traffic problem. Right. You look at a company like JCPenney, where Marvin was previously, that's a traffic problem.